Good afternoon, and thank you for joining us for the 2020 Sales Tax Update for Retail Manufacturing and Distribution with Acctivate and Avalara. My name is Jessica Kaiser, and I'm with Avalara, and we'll be joined here in just a couple of minutes by our presenters, Jason Warren, also of Avalara, and Dakota May and Eva Reese with Alterity. A couple of housekeeping items to cover before we get started. First off, I did just want to let everybody know that the webinar today is being recorded, and you will receive an email tomorrow with a link to that recording, as well as a copy of the slides and links to some of the other resources that are mentioned during the presentation today, as well as contact information should you want to reach out with any questions. We do also want to make sure that today's session is interactive and we get any questions that you have addressed. So a couple of ways that we'll have to be able to do that is, first off, we are going to ask a couple of polls during the session, and we'd really appreciate your feedback on those when we get to that point. And then at any point during the presentation today, you can enter a question into the Q&A area, and we'll make sure that we get those addressed before we end the session today. I think that's it for my kickoff, and we'll go ahead and hand it over now to Dakota May.
Thank you, Jessica. I really appreciate that introduction. And I want to say thank you to Jason and yourself for helping us put this webinar on and provide this great content for our viewers. I know we've got some exciting sales tax updates that Jason will be sharing with us. So I won't take too much time before handing it off to you, Jason, but I do want to quickly go over today's agenda, which will start with an overview of the Acctivate and Avalara partnership. Before handing it back over to you, which I know you'll kind of cover the bulk of today's presentation. Then we'll also hand it off to Eva, who will kind of cover the highlights of the Acctivate Avalara integration before we get to those questions and answers that Jessica mentioned earlier. Now, as we focus on the partnership, I'd like to kind of take a step back and kind of talk about what Acctivate has historically focused, where we focused on. Providing small businesses a path to continued use of QuickBooks beyond its kind of expected use or expected capabilities. Most often this means we are focused on larger small businesses that use QuickBooks Enterprise, but are maybe considering moving on to different applications that can do more on the operational side. By offering Acctivate as an integration to QuickBooks, it really opens up those operational tools that you see in a lot of mid-range ERPs and allows those small businesses to stay with QuickBooks and allow QuickBooks to do what it does best with handling the financials. This typically presents new challenges as it relates to growth and scalability, such as handling larger order volume, especially if you're looking to diversify into e-commerce and EDI, which can also pull in, physical and economic growth, going beyond local, regional, and even going nationwide with your growth. That really puts this partnership kind of front and center as we look at those challenges that those small businesses are looking to kind of handle and grow beyond. The complexity of sales tax can also become quite a bit of a burden, especially if you're still doing handling sales tax within QuickBooks and using some of those where you're having to handle the accuracy yourself, doing your own checks and balances there on your own. Using a solution such as Avalara as it integrates with Acctivate becomes a very valuable resource for the Acctivate community. So with that, I'd like to hand it over to Jason, who will be able to tell us a little bit more about Avalara and some of those recent updates that are really affecting the current climate as it relates to tax compliance.
A great kickoff to our call today, Dakota. I appreciate you taking a few minutes to share some more detail about our partnership, all of the value that you bring to your customers today, and ultimately why we're in partnership together. So also to all of you that have taken time out of your days collectively to be a part of this with us, thank you for that. We know that you're very concerned about looking for ways to minimize or eliminate what I would call blind spots in the business. And today we're going to focus on tax compliance. to echo and amplify one thing that Dakota said earlier, and that is you all have found ways to really gain more value out of your current back office accounting system with what is a powerful and very feature-rich application in the Acctivate product itself. With Avalara, our focus is solely on tax compliance for your business and taking technology to automate that process for you, eliminating the guesswork. We're going to talk more in the next 25 or so minutes about things that will impact your businesses. And I've worked with Dakota and team along with Jessica really to expand this out in a way that all of you will find certain parts of this presentation today to be valuable to you and be directly applicable to your business. So I encourage you as we go through this together over the next half hour to 35 minutes that just know that there's going to be some things that are directly pertinent to your business. And I hope you walk away from today's session with the knowledge that you need to be able to make decisions for your business that are going to allow you to continue to grow, where you can eliminate risk and really continue to expand how you're serving your customers today and as you add additional customers in the future. So with that, I would like to kick things off by starting out with one of two polling questions we're going to ask today. I want you guys to be a part of this in the audience. And so Jessica, with that, I'd ask that we go ahead and start today with our first of two polling questions.
Okay, great. Thanks. I've launched it. Hopefully everybody can see it up on the screen now. So first question, in approximately how many states does your company do $100,000 or more in gross sales or 200 or more transactions, for instance, invoices annually? And the response options are 0 to 1 states, 2 to 5 states, 6 to 10 states, 11 to 25 states, 26 to 50 states, or if you haven't looked at this previously or don't have a gut feel, we've got an unsure option that can be selected. Everybody, appreciate you guys jumping in and sharing your answers with us. And we'll go ahead and give everybody a few more seconds to make a selection. And starting to slow down a little bit, so we'll plan to close in 5, 4, 3, 2, 1. Okay, and showing the results with everybody. So largest group is 6 to 10, with just over 30%, and pretty fairly evenly distributed across the other groupings otherwise, with the smallest being 26 to 50. Thank you so much for participating. That definitely helps us get a sense for where you guys are. Jason, back to you.
Thanks, Jessica. Thanks, everybody, for participating in that poll. Really appreciate it. I think it probably goes without saying. I imagine that all of you probably know this today, but states in general are heavily reliant on the revenue that is generated from the sales taxes that are collected by you and passed along to the states. And this graphic is just to give you a sense for, in general, what percentage of revenue at the state level is made up of sales taxes. So as you can see, it's significant. And with that, we've found that over the years, the states continue to beef up their efforts and their resources for audit and interaction with businesses that are based in their states and more businesses outside of their state. And so with all that's happening, and we're going to talk about a few of those things today, including some resources we have available to you specific to COVID-19. And I'll talk at a high level about those as a part of this presentation. But also, too, going to talk to you about this concept of economic nexus, where the states continue to look for ways to really, and what they've done is redefine what it means for you to have an association with a particular state. And they've done it in such a way where it's an economic-based set of thresholds. And so we're just seeing that many businesses across all sectors, across all verticals, selling all types of products and services have been impacted by the rollout of this concept of economic nexus legislation. So in addition to some things around COVID-19 and resources that we have available to you, and I'll share those as a part of this presentation, we're also going to talk about not only economic nexus in detail, but also some other types of nexus that you should be considering in your business. So when you're looking at solutions like the one that's available from Alterity, the one that you have today, as well as other things that you can do within your business to really partner with companies and technologies that are best of breed, these are going to help you to do these things that I share with you in these various silos, right? And so ultimately, how can you manage growth? How can you reduce your risk? You can do this through technology and through automation, because at the end of the day, compliance, and I'm not suggesting that any of you would think this, but it's important to remember the compliance is not optional. And all too often, there's just so many things that you and your staff and others within your business are dealing with in a reactive sort of way, in a day-to-day, with the day-to-day things that you're working on with your customers, through your marketing efforts, through your sales and customer service, that there are certain things like tax compliance that end up being addressed more at a committee style level and handled in a reactive way, certain times throughout a month, throughout the quarter, and ultimately at the end of the year as well. And it's important to note that because sales tax is such a large part of state revenues, and because there's been a lot of changes with regards to legislation, those in and of themselves are points that you have to consider. But then there's other things that can trigger tax challenges for businesses, and those are specific to the growth of a business. And we see this all of the time here at Avalara with companies that are using the Avalara platform. And these are just some of those examples, whether they be more in the day-to-day, when it comes to expanding into other geographies, whether it is to support your own growth, where you're hiring additional sales, marketing, finance staff, and ultimately being ready in the event that there is an audit of any sort. And if it's a state audit, or in some cases a local audit, how can you and your business be prepared for that, right? And just, as a reminder, when we talk about something like tax compliance, there's a certain level of associated risk. And then there's also a certain amount of repetition that goes into a process specific to tax compliance. And so with those two things, if you can take something that's relatively repeatable, right, in the invoicing process itself, and it comes along with a certain percentage of risk, look at that as an opportunity to actually automate the process to eliminate that unnecessary overhead from having to do that work manually, and ultimately the risks that are associated. Above and beyond that, it's important to consider what sorts of activities within your business may ultimately create enough of an association to a state that then gives your company obligation to then get registered. I touched on it briefly, and we'll talk about it more, but there's the economic side of that. We call that economic nexus legislation. And then there's also a more traditional type of nexus generating activities. And you see these here on my slide, right? This is not an exhaustive list, but it's relatively comprehensive in that it covers a lot of categories for you, right? Just to call a few off of the page, if you sell through any sort of channels or have affiliation with other businesses that ultimately help you to broaden the way that you go to market and make prospective customers and existing customers alike aware of your products, selling those through a reseller channel or through some other types of affiliates that can create nexus. If you have locations throughout the country, and in those locations you have revenue generating employees, if you have locations that you utilize for warehousing from a logistics perspective, that potentially could put your company into a position where technically you should be registered in that state, ultimately collecting sales tax when doing that invoicing. So the list goes on. And again, I'll share this slide deck with everybody here that's attended today. But before we continue, and I'm going to kind of switch gears, we're going to talk more about economic nexus. I think this is a good point in time to bring up our next polling question. So Jessica, if you're ready.
Sure, yep. Picking it up now. Hopefully everybody can see it. So next question, how much urgency do you feel to implement an automated sales and use tax compliance solution? Option 1, I feel the pain, I need it now. Option 2, it's on my to-do list, but I have other priorities that are more pressing. Option 3, it isn't on my radar screen. And option 4, I'm already a tax automation pro. And definitely get people on these webinars that are really at all ends of the spectrum. And for some people, it may be brand new info, and for others, you guys, potentially have been thinking about it for a while. So I'd just love to get a kind of pulse on where everybody is. And we'll still getting some responses in, but we'll go ahead and plan to close in 5, 4, 3, 2, 1. Okay. And sharing results. So not surprisingly, big group saying it's on my to-do list, but I have other priorities that are more pressing. And then, smaller, I feel the pain, I need it now, and it isn't on my radar screen. Thank you, appreciate it. Jason, back to you.
All right, thanks again, everybody, for your feedback. So as promised, I'm going to switch gears, and I'd like to talk really about something that occurred not too long ago, June of 2018. Where we had really a major shift with regards to companies throughout the U.S. and their obligation for registering in states. Where I'm going to talk to you about and show you just how that's evolved as of the Supreme Court's decision, where they made a decision in favor of the state of South Dakota. And ultimately, this concept, as I was sharing earlier, of economic nexus legislation was enacted first by South Dakota, but then very quickly, most all other states have followed suit. And we can see that from the time when South Dakota enacted it through current. And we'll talk about that in a little bit more. But again, this is the idea of really eliminating the dependency on some level of physical presence, right? If we think about nexus in traditional fashion, are there employees in that state? Are there company trucks going to that state? Are you participating in trade shows? Do you set up a temporary office in that state, N number of days throughout the year? These are all challenges related to more of a physical presence type definition. But as you can see, after South Dakota enacted their legislation, January 2019, the number of states quickly rose, and then you look fast forward to the end of 2019, there's only really essentially 2 states left. The other states don't have sales tax today, but Missouri and Florida are still on the fence. All indicators are that they are likely at some point to enact economic nexus. They just haven't gotten to that point yet. Economic nexus thresholds vary by state, and there's more information that's available to you. If you Google Avalara Wayfair, it will take you right to our resource page that is specific to these economic nexus legislation rules. But I wanted to share with you some examples, and I hope these are helpful for you. But if we look first at California and Texas, you'll see that the threshold itself is kind of a single threaded threshold, and it's based on $500,000 in sales in a calendar year. If that threshold is exceeded, then it's required of the business to then get registered. And technically speaking, on any sales starting with $1 past the $500,000 in sales, those sales are supposed to be considered for tax determination. There's factors as to why those may not be taxed. Maybe the customer has an exemption document on file. Maybe the customer has a direct pay permit. There could be reasons why. Maybe the product that you're selling to that customer or those customers is actually deemed to be non-taxable product based on California or Texas, legislation, sales tax legislation. But those are some of the other layers to consider as well. Whereas when you look at states like, I'll take Connecticut and Georgia next, if you'll look here on the East Coast, They have two pieces to the threshold, but they're very different in that Connecticut is saying that both $250,000 in sales in the calendar year and 200 invoices or retail sales in that same calendar year, if those two are exceeded, then economic nexus thresholds have been met and the company would have to then get registered. In Georgia, it's a little bit different. It is a 2-layered economic nexus threshold, but it's 100,000 in sales in the calendar year or 200 retail sales, transactions or invoices, however you want to look at that, but volume of sales. So it's an or versus the and. And again, we have all of those details available at avalara.com, and you can also Google Avalara Wayfair, and that part of our site, that resource section will come up for you as well. Just because economic nexus has been, legislation has been rolled out, it did not replace the physical presence legislation that's always been there. So it's additive, it doesn't replace, and it's specific, as you can see, to the fact that you need to still consider what physical triggers might actually have to be considered when doing an analysis of your business and how you've grown and where you potentially need to get registered, even though these economic nexus thresholds have not been met. We are seeing a significant number of companies shift the way that they sell and market to their customers. It's so important that you have avenues to be able to really open up your markets and get in front of more prospective customers. And we find that a lot of companies are now doing this through what are called marketplaces. I like to think of marketplaces, and this is only my opinion, but marketplaces are really virtual shopping malls, right? In that we have these companies like Amazon and Etsy, eBay, Walmart, the list goes on, that are opening up these virtual marketplaces where companies like yours can quote unquote partner with somebody like an Amazon.com to get in front of more customers and hopefully do it in such a way where you're reducing your marketing spend to be able to really get in front of those companies. And so states have been slow to catch up with the way that this has evolved, but they are catching up. And I just want you to be aware of that. If any of you on today's call have engaged in marketing and selling your products through marketplaces, or you're even considering that, just know that there are resources and there is technology available to you to make this possible, to be able to do this in such a way where you're not putting additional burden on yourselves and on your staff to stay compliant when it comes to selling through marketplaces. I've been with Avalara now for almost 16 years, and I will say that I'm happy to say that I've had thousands of conversations, maybe tens of thousands of conversations with business owners, executives, and employees all over the country that are in distribution, manufacturing, retail, right, and covering all the different sectors. And a lot of times it's very common that when I talk to executives that have businesses, running businesses in manufacturing, that a lot of times kind of their initial response to me is, oh, we don't deal with sales tax. But the thing to keep in mind in the US here is that all businesses have an obligation that is related to sales tax and sales tax compliance. So if you are a manufacturer, I would just ask that you consider that there are some blind spots there for you too. And I want to make sure that you are preparing yourselves, your company, to be in the best position you can in the event that there's an audit. And so a lot of times with that, states and the agents of those states will schedule audits with manufacturers because they know that there are still a certain percentage of those sales that either should have been taxed, or maybe tax is not being collected, but there's not sufficient documentation to back up and create a paper trail to show why that particular customer or population of customers were exempt from having to pay sales taxes on those invoices. So just know that there are intricacies there. with regards to the products that you're selling, the types of customers that you're selling to, and ultimately that obligation where maybe you're not collecting sales taxes on a particular set of invoices, whatever the percentage of those might be. But what are you doing to make sure you have the appropriate documentation on hand? And look at a big picture too. How do you do something that actually scales? Because that documentation in many cases has a life expectancy, meaning that it has an expiration date on it and that it's tied to those businesses that have given you those documents. If anything changes about those businesses, it likely will impact the validity of the document that you collected at some point in time, meaning that it may no longer be valid. And so if you put technology in place that can automate this process, it allows you to scale and stay compliant. And here are some of these things as a backdrop, right, to consider. And if they are exempt and you have the documentation, how do you set up a system in such a way where you easily can see and track those exemptions and how long they are valid for, how long they are applicable, and whether or not they need to be replaced. Certain types of parts that are being sold and equipment that you sell to your customers. If you are an equipment manufacturer, if you provide value-added services like warranty and maintenance services, how are those to be reported and handled from a tax compliance perspective? So this graphic here just, again, gives visual representation of the conversations I've had throughout the country talking to executives across all different types of industries. It's really very important to remember that tax compliance is something that really applies across all sectors. Exempt sales does have an impact when it comes to economic nexus. And with many of these states, you'll see, and again, this slide deck will be provided to you. I've got some visual representation for you, and you'll see a key in the bottom left-hand corner where there are a number of states where the exempt sales need to be included as a part of the sales thresholds that the states have set, right? And so there's a general category of all exempt sales, and there's another category where exempt services would be either included or not included, right? And just to call a couple of to your attention, in Georgia, notice how, and I know it's a relatively small graphic, exempt sales are included. However, exempt services as a subset of those exempt sales are not included as a part of the economic nexus threshold. So again, if you remember a slide from earlier that I shared with you, there's those thresholds that are defined. Those thresholds, it's important to actually kind of use that map as an overlay. I thought this was an interesting statistic, but it just shows that there has been really a turning tide over a number of years where manufacturers are engaging more and more in direct sales, right? And so it's a mixed, it's a way to open up additional channels of sales, not only through distribution and wholesale, but ultimately some percentage of those sales direct to the consumers. So we're going to talk about this more in just a minute, because we are going to have for you a product presentation. But before I turn this over to Eva, I just want to give you a high-level understanding of how this is delivered. And it's only available through the integration that's been built by Dakota and his team there at Alterity. Avalara is a service, a tax determination, a tax compliance technology that is native to the cloud. It's natively a web service, which makes it a true, what we call multi-tenant technology. The reason I share that with you is it means that it has infinite capabilities to scale with your business. Because we've architected the platform in this way, it allows for Alterity to be able to go and actually build, essentially native to the platform, an integration piece that allows you to connect to your own subscription-based account right within the Avalara platform. And inside of that platform, there are 3 modules. core module is what we call Avatax, and that is really the core piece of the tax engine that handles all things from data collection as a part of the invoicing process to aggregating that data, making all of the right calculations and sending those calculations immediately and directly back into the invoicing that you're processing. So there's no change to the interface within Acctivate. And ultimately, you can expand beyond Avatax and have full document management capability for your exemption certificates. If you have a channel of resellers, if you've got customers that have manufacturing exemptions or direct pay permits, it also can manage for you your W-9s and your W-8s as well on the vendor side of your business, automating that process. And the third module is the returns filing piece as well, where you can fully outsource and automate the returns piece. So with that, I'm going to go ahead and push pause because I would like to actually turn things over. Eva, if you're ready, I want to make sure we have time to actually take a look at the integration itself. So Eva, are you ready?
Yes, absolutely. Thank you so much. Let's go ahead and talk about the Avatax integration itself. So the setup of Avatax and Acctivate is really simple. You're going to go and open up Configuration Manager. You're going to select the Services section. There's a service right there called Avalara. And then in Avalara options, you're going to enter your Avatax account number, license key, URL, and then you'll test your connection. Then in the tax code setup itself, we are going to go into QuickBooks and set up two tax items. The first, that Avatax one at the top, is going to be used as a tax category in Acctivate. So all of your customers and your sales orders will all use the Avatax tax category going forward. The second, which is the line item one, is actually going to only be seen in QuickBooks, and that's going to help you balance your invoices and account for your sales tax payable itself. So then we'll talk about the tax category. Well, on all of the customers in Acctivate, you're going to need to set that tax category to be Avatax. You can definitely do that one at a time, or you can bring in an Excel file via the import data function with Acctivate and set all of your customers at once. So with that add-on for Avatax, that cert, we do have the ability to send those tax exemption codes back to Avalara to verify everything. So you're going to set up the customer type in Acctivate to use the customer usage codes or entity codes used by Avalara. So that tax exemption code where you see the J and the N, those are actually related to customer usage codes in Avalara itself. Once you set up your customer type selections, then we're going to add in the actual cert numbers for your customers themselves. All right, so the last, just the last step of the configuration is setting up your warehouse addresses. These are used by Avalara as the origin point for the sales order, since some tax rules are based on where you are shipping your items from. So you're going to need to make sure that all the warehouses you ship from within Acctivate have the full address filled in. So now that we have the connection set up, let's talk about the invoicing itself. So like Jason was saying, we aren't changing anything in the interface itself. You notice there's no new fields or anything like that on the sales order screen. It's just normal. If you're a current Acctivate customer though, you're used to managing all of your tax categories in QuickBooks. And so you have an extensive list of tax categories in there, maybe by zip code if you are doing sales tax in any of the states that do it by state, county, and city. So it's been a lot of work to keep up with it in the system itself. Well, now you're actually going to be using just the tax category called Avatax, and all of your sales orders will be set to that. That's actually where Avatax is going to set up the and send the tax calculation back. So when you hit save on the sales order, it will actually calculate the sales tax for you. We will also send the origin address, or that warehouse address, to calculate that sales tax. We're going to send the destination address, the date, the exemption codes, and all of the products will be sent to Avatax as well. And that's because those products are set up with tax rules within Avalara now. So you'll notice that my shipping has a sales tax code of non-taxable. And so that's set up actually in Avalara, so that way I'm not having to manage it in both systems. Then when we look at our QuickBooks invoices, those are going to look a little bit different now. So instead of having the sales tax calculation show up at the bottom where you see it highlighted there, it's actually going to show up as a line item. And that's because we don't need to calculate it twice. We've already calculated it through Acctivate with the use of Avatax. So when we're bringing it into QuickBooks, we are just wanting to make sure that the invoice is balanced, and we want to send the total for that sales tax into your sales tax payable account. And so that's what that Avatax line item is. It's actually going to be adding to your sales tax payable. And if you are using the reports filing function of Avalara, then they will actually pay all of those for you, just by reconciling that account. If you are not using that, then you'll be able to run reports within Avalara to see where you need to pay all of those different sales tax too. Another cool part of Avalara is actually the address validation. We are giving you the ability to not only validate your addresses for the sales tax itself, but also for shipping and things like that. So these are actually enabled based on the country code of the customer ship to address. So you're going to set this up in Configuration Manager as to which countries you want to have Avalara do the validation for. So when we're looking at this particular example, the Acctivate was going to submit the addresses on the sales order in quotes to Avatax for address validation on all countries except for Mexico in this example. So it's definitely going to help, not just for your sales tax, also for shipping. And I've definitely found that as companies grow with Acctivate into more e-commerce channels or their sales cross state lines, that Avalara is a really great option for managing all the complex sales tax rules. Instead of hiring a new account clerk to manage sales tax and things, it's definitely helpful to have a system that actually does it for you. So let's go back to Jason to tell us about some additional resources that Avalara has.
That's great. Thank you, Eva, for walking us through the product. That was awesome. So just a couple of more slides for everybody here, literally 3 more, and then I'd like us to take time to answer your questions. And I hope all of you can stay on because I think the questions will be helpful for everybody. I did want to share with you that in addition to those things that I shared with you already, the Avatax piece along with cert capture for exemption document management, and the tax return filing services, there's also a program referred to as Streamline Sales Tax. It's a program that's been around since the late 90s, and there are now a total of 24 states that participate. There's some advantages to this program, and you have to participate through this program ultimately to get all of the advantages, all of the perks, if you will, of SST, through a provider like Avalara. So Avalara has been certified by these 24 states. And here are just some high-level advantages for you. So if you're looking at economic nexus and you're looking at just your overall kind of business footprint, if you ultimately see that you're going to have to be registered in most, if not all states, SST is a program that can potentially reduce your cost, and it can also reduce your overall liability. And so with SST, Streamline Sales Tax, these states, as participants, when you register for the program, recognize one registration number across all 24 states. So it reduces the time and effort and cost that would be associated with having to register in each of these states. In the states where you're able to get status to be a volunteer registrant, meaning that you don't meet physical nexus requirements, and you're choosing to register in those states, you would potentially qualify for free tax determination through the Avalara service, meaning it would be included. Tax determination subscription plans are based on the number of invoices you process annually. So if you are voluntarily registering in certain states via the SST program, that would reduce the level of plan that you would need to be on, reducing your cost. And in those same states, the returns, which would be the SST returns that would get filed, they're electronic. It's referred to as the simplified electronic return, would be processed for you on your behalf by Avalara at no additional cost. And you also get advantages in the program with regards to audit assistance and response. So if you'd like to learn more about that, I encourage you to definitely go through your resources at Alterity and ultimately have a conversation with one of my team members here, Mo, who is also on the call and works with the team at Alterity and Alterity's customers. So we can answer any questions that you have. We do have, through the end of June, a promotion that we've created, really a program, and it's around just understanding that decisions right now on spending on technology can be a little bit difficult for many businesses across various sectors, just because of what we're all dealing with regards to this pandemic and how it's affected the economy and you all at the business level. And so we have a 3-month offer on the table now, a 3-month free. So it would be an annual plan, but it would actually be 3 additional months up front at no additional cost. So we're trying to do what we can to really help as you're looking to get compliant, as you're seeing that it is important to automate, creating a way for you to be able to do that, where you would have basically a 15-month first year, and that first 90 days would be at no cost to you. So would be helpful for you as a part of the onboarding and the configuration and getting up and running on that and using it, ahead and getting that done now. So Avalara's got an entire blog dedicated to COVID, and it's a part of the avalara.com website. I will share these links when they are sent around to you in the PowerPoint deck itself. But there's a number of great resources in there for you, some of which speaks at the federal level and some things that we've seen that have really been rolled out for businesses, a benefit to business at the federal level. And then we also have within that blog a number of different points for you at the state and local levels on things that we've seen that have rolled out. So I encourage you to take a look at that and learn more with regards to things that have rolled out at both the federal level as well as at the state levels as well. And with that, I'd like to see if we've got any questions that we can answer. Jessica, have any questions come in?
Yep, there are a couple so far. And just a reminder to everybody, if you have a question, you can put it in the Q&A area at the bottom of the console, or I think it's at the bottom of everybody's console. It could be at the top of yours, but there certainly is a Q&A area. First one actually came in via chat. It says, just to confirm, the dollar amount is for the total gross sales or sales in that state?
Yeah, that's a great question. And I'm just going to go back to an earlier slide. So I'd ask you to reference that, but it depends. It's on a state-by-state basis. Sorry here. I was just trying to look actually for that slide that I had shared earlier. And you'll see here that it's, this one is specific to exempt, but we also have details on the avalara.com website that will show you whether it's based on gross sales or only your retail sales, those that are deemed to be taxable. So we've got more of that detail for you. If you Google Avalara Wayfair, it will take you right to that resource page.
Perfect, thank you. Next question, how does Avalara take total sales to file tax returns? So I'm assuming that means what is calculated as total sales?
Yeah, so that's a very important question because total sales, depending on the state that you're talking about, can actually mean different things, right? So whether we're talking about total sales to mean total sales that are occurring within that state, right? The customer is based in that state and you're shipping to a location in that same state where you're located, so in-state sales, versus those that would be total sales that make up all sales across the country, regardless of what state they occur in. And then there are certain cases like New York State, for example, where total sales actually means all of your sales within the US and outside of the US as well. So total sales all over the world. And so the best thing that you can do with a system like Avalara is make sure that you're processing everything through the Avalara system, because then it's going to show you, it's going to display for you your total sales in those states today where you're registered to collect, and even the states where you're not. Because there are cases where, again, the examples I used for you, where there are states that require that your total sales literally are your total sales, your taxable sales, your exempt sales, and your out-of-state sales, all collectively combined.
Great, thank you. Next question. A manually entered ship-to address in Acctivate does not always map to the correct fields for state, zip, and country. Does Avatax recognize that situation when it occurs? And also, how is Nexus determined for orders with no ship-to address that are picked up by customers?
Yeah, so that's a two-parter. I'll take the first part of that, and then I'll answer the second. And Eva and Dakota, if there's anything that you think should be mentioned specifically within the integration piece itself, within Acctivate, let me know. But with regards to entering in a ship-to address on the fly, that's a very common scenario, believe it or not. The Avalara service doesn't require that you run it through the separate piece, which is the address validation piece of Avatax. As a part of the invoicing process, the technology itself is going to normalize and verify that address in the background. It's not going to have any impact on how fast the tax is determined. It's going to be blink of an eye. It's going to be very quick, right? And so with that, the service itself is actually verifying that address. We have fallback capabilities within the technology. So ultimately, if you've entered in an address and it's just unfortunately so far off that the city is not actually in that state, and the zip code that you entered is not in that state either, ultimately, and that would be a scenario that likely would never come up, but I'm trying to give you worst case scenario, an edge case, and that would be that the Avalara service would default to the zip code that you had provided when you entered that ship-to address, so that it's making a determination based on the zip code. But it is kind of a best practice, we believe, that if you can, get your addresses entered into the Acctivate system with all of your ship-tos as well as best you can, and create a process or a procedure where most, if not all, of your addresses that you have to enter in are captured as a part of the ship-to, so that you're storing those. And that way you can take advantage of the address validation service, and you know that the full address is being utilized when determining the taxes. The second part of that question, Jessica, just remind me on the second part.
Sure. It's how is Nexus determined for orders with no ship-to address that are to be picked up by customers?
Yeah, so pickup, we would call those point of sale or will call transactions. And so that is going to ultimately impact your economic nexus thresholds in that state, where you're allowing for point of sale type will call transactions to occur, where they can come in on site, pick them up, and walk out the door with those. So that's how the service is going to recognize that. It's going to use the origin as, it should use the origin address as also the destination in the case where you're doing a will call or a pickup.
Great, thank you. Next question. Where do we need to set up sales taxes when you are working with Acctivate and QuickBooks?
Eva,
So I can take that one.
Yeah, thank you.
So essentially, the only setup is what we talked about earlier, where in QuickBooks, you're adding the tax items for Avatax and Avatax line item. So you're adding that in QuickBooks, you're running a sync to Acctivate, and then you're setting Avatax as the only tax category on all of your sales orders going forward. That's the only setup needed for the sales tax.
Perfect, thank you. Next question. If you add a new customer and want to make a sale that same day to that customer, does Avalara calculate the correct tax immediately, or is there some delay before we could calculate the tax?
That's a great question. It's in real time. So as soon as you set up that customer and as soon as you invoice that customer, Avalara is going to make the determination for you. The caveat on that would be is that if, and I know this wasn't a part of the question, but if this is in a state where you've not yet registered, so you haven't taken the next step to then set that state up inside of your Avalara account, you're still going to be able to process the invoice, but because you haven't registered and you don't have a nexus presence yet, according to the Avalara setup in your system, it's going to capture that invoice. It's going to be reported as a part of your total sales, but the determination will be is that there will be no sales tax on that particular invoice.
Thank you. The next one looks like it might be for the Acctivate team. It says, we use the customer type for other customer identification criteria, but it looks like Avalara would need to use that field.
Yeah, so I think this is only really when it's talking about that add-on that you guys have for the cert part. So if you're wanting to use the Avalara certification part, then yes, your customer type would need to be essentially changed over to those customer usage codes instead of customer identification. But we can definitely set up customer types in other ways, such as marketing codes, marketing lists, and things like that.
And if I could expand on that for you too, and Eva, that was a great explanation. That customer type field for a lot of companies actually is optional in that it is an entity and a usage-based code that is designed for exempt customer reporting. So some companies get into a situation where the state says that your sales have to be broken out by exemption type, whether it's resale or agricultural or government, whether it be federal or state. But if you're using Cert Capture, that document management system I mentioned, it will automatically work in concert with Avatax so that when you're invoicing a customer that has an exemption on file, it will return the decision that the sale is exempt as long as you have that document on file inside of Avalara. What Eva was speaking about is the fact that you can go that next level and actually report using those entity usage codes, but they are potentially optional for you. So.
Great, thank you. Great questions coming in. So next one is, what if some sales originate with a Magento integrated transactional website and not in Acctivate? Tax needs to be determined and charged initially on this Magento site.
Yeah, we see this as commonplace at Avalara. It's become very common for companies to sell through an e-commerce channel. Magento is one we hear about a lot. And so what you would want to do is you'd want to have integrations into both Acctivate as well as into Magento. The reason for that is because then you'll have your single Avalara account. And so that anybody that's buying online through your e-commerce site, the decisions are being made by the Avalara site based on your setup. Those orders are ultimately likely being pushed down into your QuickBooks system, whether they are channeled first through Acctivate and then captured inside of QuickBooks, or if you're maybe doing some sort of data file transfer from your e-commerce site directly into QuickBooks. You'll want to make sure then that that any adjustments are taken into consideration, and ultimately, and most importantly, that those are actually then captured as a part of the invoicing closeout process. So as those invoices are actually finalized and posted to the general ledger, they will also then be captured inside of the Avalara platform for reporting as well. With your Magento site, you would be using that for tax determination, but you wouldn't be required to set it up in such a way where those shopping cart transactions are actually committed or captured inside of Avalara until they've actually been posted as invoices through your Acctivate / QuickBooks integration.
Perfect, thank you. Next question, how do you handle marketplace sales tax when the marketplace is billing, collecting, and remitting it to the states?
Yeah, that becomes a bit of a trickier scenario, and we've got some really great write-ups on that for you as well. Because ultimately, if you're working, for example, through an Amazon.com marketplace, and Amazon is actually taking care of all of those things that you just mentioned, you wouldn't want to then also incorporate those in with your reported sales that you have through Avalara and then pay taxes on those as well, right? Because ultimately you'd be allowing the states to kind of double dip on that. So we've got some more write-ups on that. That's a hard one to kind of unpack for everybody here in a short amount of time, but just if you would even Google Avalara and marketplaces, we've got some great information for you on that.
Perfect, thank you. We are in Canada, shipping across multiple provinces within Canada. Would Avalara be useful in our case?
You know, we do have a number of customers that are based in Canada and selling to their customers that are in Canada as well. You know, we found that, you know, it's really up to you on that, right? Because when you look at it from a perspective of having 10 provinces and 3 territories, with a fairly, you know, short list of different rates from PST to GST, HST, and QST. You know, ultimately, you may decide that you can handle it in more of a traditional sort of manual way. But the Avalara service does do full calculation and reporting for Canada, in addition to the US, and then 191 other countries as well when it comes to value-added tax. So definitely it's available to you as a part of the overall Avalara subscription. It would just be you know, up to you as to whether or not you think automation would really be a big help for you, specifically in Canada.
Perfect, thank you. Next question. When we were audited by our state a few years ago, we had to produce many different types of detailed sales reports to show exempt and taxable sales. Is there extensive flexibility for ad hoc reporting?
Avalara, and we didn't talk about this at all today, but Avalara has a whole host of reports that are available to you. This library of reports that we make available to you is native to the AvaTax portion of the Avalara service. And these are jurisdiction summary and jurisdiction detail reports that are included. We also have invoice summary and invoice detail reports as well. And there are a number of reconciliation reports that are designed to be utilized in conjunction with the Avalara returns tax filing service itself. And then above and beyond those pre-created reports for you, and there are somewhere in order of about 45 to 50 reports. There are also predefined export layouts as well, so that you can export the data, for example, directly into an Excel file as a CSV file format, so that you can utilize that data in any way that you need to, whether it be for reporting or ultimately maybe importing into another database within your systems.
Great, thank you. Next question. For items such as candy and sugary drinks, which may be taxed by some jurisdictions and not taxed by others, are there additional tax codes that may be set up to identify items that are sometimes exempt?
Yeah, that's a great question too. And Avalara, as a part of the subscription to specifically AvaTax, you will get access to more than 2,000 different category codes. These are categories that represent all of the various goods and services that are sold and that are ultimately supported by the Avalara service. And behind these goods and services codes are all of the rules that you would need. Things like threshold rules and rules that you just mentioned that are specific to foods and different food types, whether they have, you know, sugars in them or certain percentages of sugars or milk, or are they considered candy versus food. And so these category codes can be set up either directly inside of AvaTax using the item to tax code mapping capability, which is just a 3-column Excel spreadsheet that you can ultimately import. Or you can do this inside of, directly inside of Acctivate, because it is a powerful inventory management system. You have the ability to assign those Avalara specific taxability codes at the product level. I have found that in general, companies typically need somewhere between 8 to 15 tax codes combined, and that would be across products and services and freight. But this allows you to let the system itself then automatically apply the various tax thresholds, tax rules, and non-taxable rules across all of your products and services.
Perfect, thank you. And we do have a couple of other questions and we'll address those, but I did just want to say we're at the top of the hour, so if anybody needs to drop, I just want to say thank you for joining and just wanted to do a quick reminder that we will send out an email tomorrow that will have a link to the recording, a copy of the slides, as well as a couple other links and resources available for you. So just wanted to catch that if anybody does need to drop. But next question, what if a customer has multiple ship-to locations and holds multiple state sales tax certificates?
So I can take that one. Within Acctivate, you can set up essentially multiple customers if need be for those multiple certificates. You can also set up customer jobs for those different locations so that way they all link back to the main parent.
Great, thank you. And then there was a follow-on question related to QuickBooks, asking if a customer has multiple locations, where do you set it up? QuickBooks will not recognize multiple locations.
So within Acctivate, for every customer that you set up, you are also able to set up multiple ship-to locations. So in that case, we would just set up a separate ship-to location for each of the locations that your customer has. And then you would be able to choose between them on the sales order record.
Perfect, thank you. And then this one is, sometimes vendors charge us sales tax in error, such as when we are buying something for resale and we have to file for a sales tax refund. Is this handled at all through the tax filing service?
So we don't handle the capabilities around kind of refund, request for refunds. What the service will do when it comes to tax return filing is that we capture any and all credit carry forwards, and we report those in such a way that we have a credit carry forward report that you can run so that you can have transparency and see exactly what might be applied in the next and upcoming reporting and filing cycle. When it comes to refunds, that's something that you just have to, that you would have to kind of go to the site if you want to request a refund, and they usually have, I believe they always have a specific form for requesting those refunds.
Perfect, thank you. And last question, at least we've gotten so far, what are the limitations of SST, streamline sales tax, with Avalara?
What was the first part of that again, Jessica, as far as SST? What are the what?
Just what are the limitations?
That's a great question. There, it really depends, I guess, on your perspective, right? I think it goes back to the fact that I had talked a little bit about volunteer versus non-volunteer. So I'll say this, there are no limitations in that. There are 24 states that participate in SST, but you are not obligated to actually register in all 24 SST states. If there are only certain of those 24 that you feel that you should register in, you have flexibility to pick and choose which of those 24. Ultimately, even if you don't qualify for volunteer status, volunteer filer under the SST program, you're still ultimately getting the benefits related to kind of that audit level protection because Avalara is a CSP. Avalara is audited by the SST states, and we, in order to maintain that status of being a certified service provider, we have to go through quarterly audits, and when we come out of those audits and maintain the certification, we've been certified that all transactions that flow through Avalara are guaranteed to be 100% correct. So it also reduces your audit risk there. Something that could be maybe interpreted as a limitation, as a part of the SST program, if you do have a certain percentage of your sales that are exempt and you have to collect exemption documents, you have to actually store at least the customers themselves, the exempt customers and the states where they're exempt inside of Avalara. So you'll need to make sure that you take that into consideration. Ultimately, it's best to use the full-fledged document management capability. But as a part of SST, you would have to make sure you capture those exempt customers inside of your Avalara account itself.
Perfect, thank you. And we have gotten a couple more questions as you've been talking. So what is the best way to handle internet orders as far as customers go? We currently use internet as the customer and ship bill to is the consumer. These orders are shipped by us, not a marketplace facilitator.
It sounds like this is a holding area just for maybe anonymous or guests that are coming to the website to make purchases. I'm going to use that as the assumption, I guess. And so this may actually be something, Eva, that you could even help me out with. But it sounds like it's a general account inside of Acctivate and QuickBooks where they're able to go online, purchase as a guest, and you don't have any of their location-based information. I don't, ultimately that would be, impossible for you to report on. And I would encourage you, if there's a way to require or capture their address information, even if they're only a one-time visitor and they're never going to come back again. That way you have captured the ship to, you're able to report on that correctly. And ultimately it will flow into and be a part of the overall reporting that we've been talking about as it pertains to tax compliance.
And just to add on to that, if we are using internet as the customer ID within Acctivate, then essentially the sales tax calculation would actually be done in the e-commerce platform where they're actually placing the order rather than being done within Acctivate itself.
Ah, thank you for that clarification.
Yes, that was great. Thank you. And then last question, if use tax needs to be paid for a purchase order in Acctivate, does Avalara app capture the amount of use tax to be paid?
Avalara does not capture that as a part of the AP and the purchase order process on your side, but you can take those transactions and on a regular basis, whether that be, for example, on a monthly basis, take those transactions that are use tax specific from the AP side, and you can upload those using what is called transaction import directly into your Avalara account. And that way, not only are your sales tax based invoices being reported, but also any of your use tax transactions are being accounted for as well.
Great, thank you. Well, Jason and Eva, you guys did a great job answering all of those questions, and thanks for everybody who held on through them all. I think we've actually hit them all at this point. So just wanted to say thank you to everybody who joined the webinar this afternoon. Hopefully you guys learned a lot, some great questions that really just bring it all kind of to life here at the end as well. And a big thank you to the whole Acctivate team, Dakota and Eva, for being on with us today and your continued partnership. And we hope everybody has a great rest of your day. Thank you very much.
Thank you, Jessica.